Section 1. The Petrodollar's Reign. A Historical Overview. For decades, the petrodollar has held a unique position in the global financial system. Originating from an agreement in the 1970s between the United States and Saudi Arabia, it established the US dollar as the standard currency for oil transactions worldwide. This arrangement not only solidified the dollar's dominance but also linked global energy prices to American economic health. Every barrel of oil sold reinforced the dollar's value and perpetuated its demand across international markets. The petrodollar system allowed the United States to exert unparalleled influence on the global economy. Countries around the world needed significant reserves of US dollars to purchase oil, which in turn necessitated holding US Treasury securities. This created a cycle where global energy consumption directly bolstered the US financial market. Additionally, it provided the US with considerable leverage over oil-producing nations, aligning economic interests with geopolitical strategies. The dominance of the petrodollar can be attributed to several factors. The stability and strength of the US economy, alongside its political and military power, played crucial roles. Moreover, the vast and liquid US financial markets offered attractive investment opportunities for surplus petrodollars, further entrenching its position. This symbiotic relationship between oil, the dollar, and global finance has been a cornerstone of international economic policy for nearly half a century. Despite its historic dominance, the petrodollar faces growing challenges. Economic diversification, technological advancements, and shifting geopolitical alliances are beginning to undermine its once unassailable position. The next sections will delve into these transformations, underscoring why the petrodollar's decline is not just a speculative notion, but an unfolding reality. Section 2. Signs of change. The petrodollar's decline. The first clear signs of the petrodollar's decline emerged with the advent of alternative energy sources. As renewable energy technologies like solar and wind power gained traction, the world's dependence on oil began to wane. Countries started investing heavily in sustainable energy, reducing their reliance on fossil fuels. This shift not only challenges the demand for oil, but also diminishes the necessity of conducting transactions in US dollars. Geopolitical dynamics have also contributed to the petrodollar's weakening grip. Nations such as China and Russia are actively seeking to reduce their dependence on the US dollar, promoting their own currencies in international trade. The creation of bilateral trade agreements and alternative financial systems are part of this broader strategy. For example, the establishment of the Shanghai International Energy Exchange allows oil to be traded in Chinese yuan, bypassing the need for dollars. Furthermore, economic sanctions imposed by the US on various countries have accelerated the search for dollar alternatives. Nations affected by these sanctions are compelled to find new ways to conduct business without relying on the US financial system. This has led to the exploration and adoption of alternative currencies and assets, including cryptocurrencies and notably gold. The decline of the petrodollar is not merely an economic trend. It represents a seismic shift in the global financial landscape. As the world moves towards a more multipolar economic order, the reliance on a single currency diminishes. In the following sections, we will explore how gold is emerging as a stable and preferred monetary asset in this evolving scenario, and what this means for the future of global finance. Technological advancements in energy. The landscape of global energy consumption is transforming, driven by advancements in renewable energy. Solar and wind power technologies have become more efficient and cost-effective. The cost of solar panels has dropped dramatically, making solar energy viable for all. Wind turbines now generate more power at lower costs. This progress is reshaping energy markets and reducing reliance on oil. Heavy investments in renewable energy diminish the geopolitical importance of oil. Nations once major oil importers are now leading in renewable energy adoption. Germany's Energiewende policy aims for a sustainable energy system, cutting oil consumption. Similar initiatives are seen in Europe, Asia, and the Middle East. This shift impacts oil demand and US dollar transactions. The transportation sector is also experiencing a revolution with electric vehicles. Electric vehicles are popular due to battery advancements and supportive policies. Companies like Tesla lead the electric car movement, prompting traditional automakers to follow. As EVs become mainstream, gasoline demand is expected to decline. This transition erodes the petrodollar system. These advancements signify a broader economic shift towards sustainability and resilience. Countries are reducing fossil fuel dependency and striving for energy independence. Energy autonomy reduces susceptibility to global oil market fluctuations. Technological innovations in energy are pivotal in the decline of the petrodollar era. Geopolitical shifts and alternative currencies. Geopolitical shifts impact the global financial system, closely tied to the decline of the petrodollar. The rise of China as an economic superpower is significant. China promotes the yuan in international trade. The Shanghai International Energy Exchange allows oil trading in yuan, reducing reliance on the US dollar. Russia seeks to diminish the dollar's influence. Russia increases gold reserves, diversifying away from the dollar. Bilateral trade agreements often use local currencies or gold, bypassing the US financial system. These actions aim to build a multipolar world economy, less dominated by the dollar. Middle Eastern countries explore financial partnerships to reduce dependency on the petrodollar. The UAE and India discuss trading oil in Indian rupees. Countries seek greater control over financial transactions, reducing exposure to dollar-based volatility and geopolitical risks. Geopolitical shifts challenge the traditional dominance of the petrodollar. The rise of alternative currencies in global trade signals a new era in international finance. Economic sanctions and financial independence. Economic sanctions are a tool of U.S. foreign policy aimed at adversaries or violators of international norms. These sanctions promote financial independence among targeted nations. Countries like Iran, Venezuela, and Russia find alternative trade methods, often bypassing the dollar. Iran uses barter systems and trades with gold and other currencies. Venezuela turns to cryptocurrencies and gold to bypass U.S. restrictions. These actions reduce the dominance of the petrodollar. Sanctions foster long-term financial independence and resilience. Nations build their own financial infrastructure, reducing reliance on American institutions. BRICS nations advocate for a new financial system, reducing dollar dependency. The global financial landscape is becoming more diversified and decentralized. The role of cryptocurrencies in shifting dynamics. Cryptocurrencies offer a decentralized alternative to traditional currencies. Bitcoin has gained traction as a store of value and medium of exchange. Countries facing economic instability are adopting cryptocurrencies. In Venezuela, cryptocurrencies help protect wealth from hyperinflation. Blockchain technology offers transparency and security. Central banks are considering central bank digital currencies. The rise of cryptocurrencies represents a fundamental shift in value exchange. Gold's historical stability and reliability. Gold has long been revered as a symbol of wealth and power. Throughout history, gold has maintained its value, even during economic turmoil. During periods of economic uncertainty, gold often surges in value. The 2008 financial crisis underscored gold's reliability as a store of value. Gold's independence from any single economy makes it a universal asset. Its liquidity ensures it can be easily traded globally. Gold's enduring appeal remains a cornerstone in the shifting financial landscape. Investor confidence in gold has seen a remarkable resurgence, driven by economic uncertainty, inflation fears, and geopolitical instability. The value of gold has reached new heights, reflecting its appeal as a safe haven asset. Increased demand for gold among both institutional and individual investors, who are diversifying portfolios to protect their wealth. The COVID-19 pandemic has been a significant catalyst for this trend. Governments responded with fiscal stimulus and monetary easing. These measures raised concerns about long-term inflation and currency devaluation. Investors turned to gold to hedge against these risks, driving up its price. Central banks play a crucial role in the global financial system. Recently, they've been increasing their gold reserves, especially in emerging economies like China, Russia, and India. This move diversifies their reserves away from US dollars and reduces exposure to currency volatility. Developed nations like Germany and France are also repatriating gold to have direct control over their assets. This trend highlights a shift towards securing tangible assets amid global financial uncertainties. By holding substantial gold reserves, central banks enhance their financial stability and resilience. This strategy reaffirms gold's status as a cornerstone of global finance. The implications for the global financial system are significant, signaling a move towards a more diversified reserve strategy. Currency volatility is a persistent challenge in global financial markets. Gold serves as an effective hedge against currency fluctuations, providing a stable store of wealth. During inflationary periods, gold tends to appreciate, safeguarding against the diminishing value of money. Geopolitical events can also lead to significant currency fluctuations, with gold often remaining stable or increasing in value. For instance, during the Brexit referendum, gold prices surged as investors sought refuge from the volatility. Gold's lack of correlation with traditional financial assets makes it a valuable component of a diversified investment portfolio. In times of market downturns, gold acts as a counterbalance, mitigating losses and stabilizing returns. Gold's role as a hedge against currency volatility solidifies its position as an indispensable asset in the modern financial system. The transition from the petrodollar to gold is reshaping global power dynamics. Historically, the US dollar's dominance provided substantial geopolitical leverage. China's ascent as an economic powerhouse is pivotal in this shift, promoting the yuan and increasing gold reserves. Russia is also diversifying its foreign reserves, increasing gold holdings to reduce vulnerability to US financial influence. The European Union is enhancing the euro's role in international trade to reduce dependency on the dollar. These shifts indicate a move towards a more diversified global currency system. This redistribution of financial clout is reshaping international relations and redefining the geopolitical landscape. A more balanced global financial system is emerging, with economic power more evenly distributed. The decline of the petrodollar and the rise of gold are affecting international trade agreements. Bilateral trade agreements bypassing the dollar are becoming more common. China and Russia have established numerous deals settled in their respective currencies or gold. The increasing use of local currencies in trade agreements signifies a strategic pivot towards financial independence. The European Union is promoting the euro in international markets to strengthen its economic influence. Trade agreements with major economies are increasingly being negotiated in euros. These transformations reflect a deeper geopolitical realignment. A more interconnected and balanced global economy is emerging as countries move away from the dollar. The shift away from the petrodollar is impacting global alliances. BRICS nations are collaborating to reduce their reliance on the dollar and promote alternative financial systems. Middle Eastern countries are exploring closer ties with China and Russia. The European Union is fostering stronger ties within its member states and with external partners. These evolving alliances reflect a significant geopolitical shift. Countries are diversifying their financial dependencies and reshaping their political strategies. New economic blocs and alliances based on shared financial goals are emerging. A more multipolar and cooperative international order is taking shape. The transition from the petrodollar to gold has profound implications for national economic policies. Central banks are increasing gold reserves to enhance financial stability. Trade policies are being redefined to prioritize local currencies and gold. Fiscal policies are adapting to attract investment in gold and other stable assets. These policy shifts indicate a broader economic transformation. Nations are adopting more resilient and diversified economic strategies. This transition is reshaping global finance, fostering a more stable economic order. National policies are evolving to manage economies and engage with the global financial system. Imagine a world where no single currency dominates global trade. In this multipolar currency world, multiple strong currencies coexist and compete in international markets. International trade agreements would be more balanced and flexible. Countries could negotiate trade deals using a basket of currencies or gold. Financial markets would become more resilient, reducing exposure to any particular economic downturn. Central banks would manage diversified reserves to maintain economic stability. The multipolar currency world would foster geopolitical balance. This scenario underscores a shift towards a more inclusive and balanced global financial system. The possibility of gold-backed digital currencies is increasingly plausible. These currencies would combine the stability of gold with the efficiency of digital finance. Central banks could issue digital currencies pegged to their gold reserves. Blockchain technology could ensure transparent and secure transactions. Gold-backed digital currencies would be easily transferable across borders. This inclusivity could drive economic growth and financial stability in emerging markets. Governments would benefit from enhanced monetary control. This transformation would mark a significant evolution in how value is stored, exchanged, and managed worldwide. The shift from the petrodollar to gold will have far-reaching economic and social impacts. Countries will need to adapt their monetary policies to align with the new financial landscape. Emerging economies could experience substantial benefits. The move towards a diversified currency system could lead to greater financial inclusion. Gold-backed digital currencies could provide unbanked populations with access to secure financial services. The democratization of finance could drive social development. However, the transition also carries risks, requiring robust financial infrastructure. Careful management and strategic policies will be crucial to navigating this complex transition. Section 1. The Global Financial Transition, Key Takeaways. The transition from the petrodollar to gold signifies a monumental shift in the global financial system. Technological advancements, geopolitical realignments, and the rise of alternative currencies challenge the petrodollar. Gold's resurgence underscores its historical importance and enduring value. Central banks increasing gold reserves highlight a strategic pivot towards stability. This redistribution of financial power fosters a more multipolar world. Recognizing these changes is crucial for navigating the future financial landscape. Strategic implications. Strategic preparation is essential in this new financial era. Governments must reevaluate monetary policies and reserve strategies. Increasing gold reserves and exploring gold-backed digital currencies can provide stability. For investors, diversification is key. Understanding geopolitical impacts is vital for informed decisions. Global citizens must adapt to these changes. Financial education is critical in navigating the evolving system. International cooperation is essential for a stable financial system. The shift from petrodollar to gold marks a significant transformation.